5 stocks on my radar for the second half of 2024 that have serious potential. We're going to break each one down, look at their performance, and talk about why they're worth watching. First up, we've got Arthur J. Gallagher, ticker symbol AJG. This is one of those stocks that doesn't get much media attention, but let me tell you, it's been quietly making investors some serious coin. So what's the deal with AJG? Well, they're one of the largest insurance brokers in the world. This company has been around since 1927, and they've been consistently delivering results. Let's look at some numbers. Over the past 10 years, AJG has seen a whopping 521% growth. That's not a typo. Their recent earnings report was positive. The estimate was $2.24 per share, but they actually hit $2.26. Now, that might not sound like much, but it was enough to push the stock up 3.43%. Here's why I'm excited about AJG. When I look at a stock, I'm always searching for consistency, and AJG has consistency in spades. Let's break down their recent performance. From December 2016 to February 2020, we saw a smooth trend of 123% upwards. Then, like everything else, it took a hit during COVID-19, but from November 2020 to November 2023, it climbed another 132%. This trend was not as smooth as the trend from 2016 to 2020, but a trend nonetheless. It then consolidated from November 2023 to May 2024. The phase 3 breakout happened in June 2024. Now we're in what I call phase 4 of the trend, which started in June 2024. Since then, it's already moved up 12%. So what am I looking at for targets? Well, first up, I've got my eye on that $300 mark. It's a big psychological resistance zone. After that, I'm looking at $50 increments. But here's the big one. If AJG can break through $500, which is a major round number and resistance level, we could be looking at $1,000 per share as a long-term target. Next up, we've got another big player in the financial sector, Brown & Brown, ticker BRO. This is another insurance broker, and it's showing some really interesting patterns. Let's break down Brown & Brown's performance. From June 2016 to February 2020, we saw a smooth 179% uptrend. After the COVID dip, it climbed another 52% from April 2021 to March 2022. Then it consolidated until December 2023. Since January 2024, it's been in a strong uptrend, climbing 35% and setting new all-time highs. This is phase 4. Now, Brown & Brown is currently trading around $100. This is a major round number, and we might see the price struggle here and form a base. But here's what I'm watching for. A clear move above the current all-time high at $103.16, set this month in August. If we see that, it could signal a continuation of the trend and offer some great buying opportunities. What are my targets for Brown & Brown? I'm looking at $150 first, then $200, and then every $50 after that. Long term, I don't think $500 is unreasonable. Remember, the current 35% climb this year is still small compared to that 179% climb we saw between 2016 and 2020. There could be a lot more room to run. Our third pick is another financial sector stock, Broadridge Financial Solutions, ticker BR. This one's showing some really interesting patterns that I think are worth paying attention to. Let's look at their performance. From May 2013 to December 2018, we saw a massive 453% climb. It then consolidated until October 2020. From October 2020 to December 2021, it climbed another 34% before consolidating again until October 2023. Now, here's where it gets interesting. We saw a breakout in November 2023, but the stock remained in a 7-month consolidation around the $200 mark. Finally, earlier this month, we saw a move out of consolidation and above $200, coinciding with a positive earnings report. What I'm looking for now is a confirmation of a phase 4 uptrend with further bullish momentum. We want to avoid a fake breakout that could see the stock move back into consolidation. Once we see that bull trend confirmed, that's when I'll be looking to take a position. My first target would be $250, then $300, and then every $50 after that. Long term, like the other stock picks, I think $500 isn't out of the question. Okay, moving away from financials, our fourth stock pick is Fiserv, ticker FI. This is an industrial sector stock that is seriously underappreciated. Let's look at its performance. From January 2012 to February 2020, we saw an incredible 724% climb. It then went into a long-term consolidation until November 2023. Since December 2023, it's climbed another 24%. Now, here's a little peek into our portfolio. We've been holding positions in Fiserv since January 2024 and have recently bought more, which means we have compounded. Here's how we did it. On the daily time frame, Fiserv had been trading inside a consolidation since March. It then broke out and closed above August's all-time high, pulled back and then broke out again, setting new all-time highs. This was the setup we were waiting for to enter. Further breakout signals like this will offer additional buying opportunities, and which is when you will want to consider entering. Before we get into the fifth stock, here's a pro tip for you. When you compound, which is add to a winning position, if you eliminate the risk on the previous position, you're essentially buying more of a winning stock without adding any more risk to your portfolio. This is what we mean by when we say cut your losers short, let your winners run. But don't just stop there. Compound those winning positions. For targets for Fiserv, I'm looking at $200 first, then $250, and then every $50 after that. Long term, again, I think $500 is not unreasonable. Last but definitely not least, we've got Lowe's, ticker L. This is a consumer discretionary stock that, like Fiserv, doesn't get a lot of media attention. But based on its past performance, it has some real potential. Lowe's had a market cap of around $9 billion in 2020. As of today, it has a market cap of $17 billion. Okay, so let's break down Lowe's performance. From May 2005 to June 2007, we saw a 121% climb. Then it went through a 16-year consolidation. Yes, you heard that right, 16 years. Now, you might be thinking 16 years of consolidation, that sounds terrible. But here's where you need to remember a key principle. The longer the consolidation, the bigger the potential breakout. Think of it like the roots of a tree. The longer and thicker the roots, the taller and stronger the tree can grow. It's the same with stocks. A longer consolidation period can create a strong base for the next uptrend. Here's how it's been playing out since that 16-year consolidation. We finally saw a breakout in November 2023. We took our first position in January when the current uptrend was confirmed. Since setting new all-time highs in November 2023, it's climbed 15%. Now, if you're not in this one yet, there's an opportunity brewing. On the daily time frame, Lowe's has been trading inside a consolidation since March. What I'm watching for is a breaking close above the current all-time high of $83.54 set in July. If we see that, it could offer some great buying opportunities. There is another stock I have for you that has already climbed over 45% since last year and is setting up for more buying opportunities. This stock has the potential to perform as well as Nvidia's 1000% climb since 2022. Click here to find out what that stock is and how to take advantage of its next uptrend.